Welcome everyone. Thank you for joining us this evening. I'll broadly take you through the session flow for today and also request you to be as interactive and participative as you can. Just before we begin, I have a few questions of you. And if you could respond by raising your hand to some of these questions, just so that we get to know you a little bit as much as you've gotten to know us through our bios and the brief introduction that Asia Society has shared with you. So my first question is, today, how many of you are wearing or carrying something that's handmade? Okay, you want to look around and see? Yeah, fantastic. In the last 3 months, have any of you bought anything that's handmade? Okay, that's almost the entire room. All right, we have quite a like-minded audience here. That's fantastic. I'm not even looking at the panel. I'm sure they have. Okay, the third and final question before we move to our panelists. How many of you believe that financing the handmade and craft sector should be the same as financing an investment in any other sector in the country? Okay, you may want to look around and see the group. There was a much larger number. In case you looked around, a lot of people put their hands down. Okay, that's interesting. Thank you so much for sharing your thoughts, your responses to my questions, and I hope the panel also got a sense of who we are talking to today. So my first question to the panel, and maybe we can start off with Manorath on this, is we all know a little bit about your organizations from the bios that have been shared and what Asia Society has told us. But maybe if you could talk us through, since we're talking about finance, your own financial and investment models and frameworks within your own organization. So starting with Okhai.
So, am I audible? Yeah. So. So Okhai largely functions as a self-sustaining enterprise at this point, which is a great achievement. So our finances come from the revenue that is generated through sales, through various platforms that we sell through. That is, of course, supplemented by donations, which are targeted for only certain initiatives within the organization, anything that can be viewed from a CSR lens as an impact initiative is something that we get donations for. So those would be trainings for skill development, it would be product innovation. We've also tried to squeeze in marketing very smartly sometimes, but that's a tricky one. So across the board, anything that can be measured as an impact that's been created in a certain community is something that we can pitch and raise funds for. So that's largely how we operate.
Thank you. So very firmly in the not-for-profit space?
Yes, very firmly so. Yeah.
And what percentage of your funding comes from retail or overall, just ballpark?
It's 95% retail. We are a D2C brand, so everything I would say is retail.
Yeah. Okay, thank you for that. Manish.
There are certain similarities between how Okhai was explained, but I just go back to maybe I'll just take. So there are certain amount of similarities from how Manorath just explained Okhai, but I'll step back a bit and say that I think in this case it started from the love of craft and craftsmen by Mr. Birla himself. Therefore, it was purely seen as a CSR initiative. But I think what we very quickly and thankfully realized was that CSR could become a sort of a passive way of helping, because it could eventually become that the weaving community may just get used to certain benefits without really understanding what it can actually bring to them in terms of livelihood in the longer run. And which is when we quickly turned it around to say that, okay, let's try and make this a livelihood example where we actually managed to create these artisan communities to believe that they can be mini entrepreneurs themselves. So instead of just doing things which is like a one directional, we started to create formats where we said, okay, you guys open your bank accounts, we're going to give you advances, so now it's your money, you have to operate with this money, you have to create orders for us, you have to be able to supply them to us on time. And of course, to be able to do all of that, we had to create an infrastructure. So we built cluster level teams to be able to guide them all through the 365 days. The only promise we gave them was that once they will associate with us, they will get orders 365 days irrespective of the market front. Now this, while it can be seen as a bit of a pampering, but I think the thought again came from this, that let them do what they do best. I think sometimes it's really difficult for us to, it's very easy for us to expect that a person is good at everything, but the person may not be good at everything. So to expect them to become entrepreneurs where they also market the product, where they also manage the orders, I think it's a bit too much. So obviously if they are able to fly out of this format, which thankfully they are not, and they are only growing in numbers, I think the idea worked, and therefore now it is morphing into a social enterprise, which is still not for profit. But the whole idea remains that it's a completely commercial manner of looking at it. So there is a very different way of sort of empathizing in it, but there is no sympathy and there is no giving away. So I think that's how I can best describe the financing here.
Thank you. That's quite helpful. And just to connect the dots here, you've got a not-for-profit enterprise that raises money through CSR, but it's still largely participating in the market in a big way. You've got, a patron or sort of corporate-led social enterprise, which is still working towards professionalizing the ecosystem and has a much longer-term vision about how this evolution can happen. In that sense.
Each order for them is therefore profitable, and each order is like a business for them. So,
okay.
Yeah.
Great. Thank you. Priya, I know that you run ecosystem enabler. So maybe if you could give us an example of a case study of another craft-based organization. We spoke about that for the audience to be able to get a sense of 3 different models.
So also from I'll start with our model and also move on to other kinds of models. So when we call ourselves an ecosystem enabler, we are what we call legally, there's no legal word for it, but it is a hybrid structure. So the hybrid exists because, one, we are a service organization, which means a lot of our initial work, much like yours, was research-led. Now, research is not typically funded in India, and when we had to bring money from outside, we needed to have a for-profit. However, because a lot of our work is largely sort of mission-driven, it is in the benefit of the community. What we are trying to do is to bridge gaps in knowledge, which is through data and information. We are trying to bridge gaps for networks, which is through our conference. And we are also trying to bridge gap in capital, which is financing. For enterprises, we realized that we needed to have a slightly hybrid structure because a lot of our work is service driven. So we have a service model. So that is our model. So we get money from the for-profit side, as well as now we are activating the non-profit to draw in CSR funding and so on and so forth. And often, even to speak of the enterprises that we mapped as part of our research, what we're beginning to realize is that while there are many, many for-profit enterprises, much like, who have a strong retail model where there is, you will make something, you will sell something, you will earn profit. We realize that for those who want to scale, if you want to become a much bigger organization, either by way of impact or by way of revenue growth, chances are that you will have to invest. What are investors looking for? Investors are looking for कि तुमने कितना profit बनाया, right? Sir, am I correct? So when you are saying कि इतना कितना profit बनाया, so you typically need to anchor it in a for-profit arm. However, the artisan, now correct me if I'm wrong here, if you have to invest in the capacity building of the organization itself, where multiple artisans have to then produce for you, there is a certain time period that is required, that you are required to invest in the capacity building of the artisan and bring them up to scale to then produce the kind of globally renowned or, market-ready products. That typically should come under the non-profit because CSR money can essentially fund that work. What is happening right now is often enterprises are anchoring the capacity building as well as the revenue side of it, the selling side of it, under the for-profit, which is why they are under pressure. What we are seeing in the sector is almost those who are very serious about scale and impact are also building the hybrid model, where you have a for-profit arm to draw in investment and you have a non-profit arm to bring in CSR and funding.
Is there an example that you can give us of such a hybrid organization?
Rangasutra, for example. Rangasutra is one of the case studies that we featured in the first business of Handmade and the second business of Handmade. Now, Rangasutra works extensively with communities across in Uttar Pradesh, in Rajasthan, in Kashmir, and they have a model of now building capacity as part of non-profit programs, which are funded by, say, a, World Bank, or which might be funded by the government, which might be funded by, say, an HCL Foundation. Now, that is only capacity building work. Now, once you train the artisan to create products, where do the products go? You have to sell the products, right? So, therefore, they've created a for-profit arm now, which is purely retail-led. So when they engage with investors to just scale the for-profit side of things, they engage with for-profit investors. When they have to do the capacity building side of it, they engage with the foundations and the banks and so on and so forth.
Thank you for that. Manorath, back to you. Apologies, I have a bad cough and I'm trying to sort of not cough for the benefit of the audience. Yeah, I'm not getting that emotional. It's just dealing with the cough. But Manorath, back to you. We were actually having a chat about the ecosystem. We were talking about very different organizations. It's not like a startup that has a great business idea, that knows how to scale, is going to the investor and saying, listen, this is what my idea is. I would like to dilute my share in the organization, and this is what, you come in with. This is a completely different context. You're talking about social impact. You're talking about employment. You're talking about, different structures of organization within the same ecosystem. Could you give us a sense of broadly, when you look at the handicraft sector, what does it look like from an ecosystem perspective? And maybe Priya, if you could follow that up with, therefore, how is this ecosystem funded? I think you've already given a little bit of that, but just to dive into that, yeah.
So as we all know, there are multiple stakeholders. It's very, very diverse. It's not like I start a company in Bombay and then I find an investor in Bombay and then I'm selling here and from here all over the world. It is completely spread out. It is remote. Parts of it is remote. There are artisan groups that might be financially literate, that might not be financially literate. Marketplace literacy does not exist in many cases. Product innovation is a gap. So there are all these artisan groups that are at different levels. Then you have social enterprises that exist in cities, in towns, again, at different levels. They might or might not have access to investors or, again, market literacy, financial literacy. Even in some social enterprises, that's an issue that exists. And then you have marketplaces and retail outlets, which are both online, offline. And all of these are feeding into each other in many cases, are also independently functioning in many cases. So in terms of investment, I would say it is a very tricky one to address because you are not just talking to one person, you're talking to an entire value chain, which is not a typical value chain that you see in any market, in any design to market product. It is a value chain, like she said, exists across even a longer timeline. It starts at 8 months and goes up to 2 years, maybe even 3 years if you're building a community up to speed to be able to produce for maybe an international market. So yeah, so it is a very, very tricky one. It needs to be addressed in a very different manner. I think funding is definitely needed, but it cannot be looked at through the same lens that we are looking at all other enterprises in the same space.
So if I may paraphrase what you're saying that you have the people who are manufacturing have various challenges and potential as well. So the value of actually being able to make something of a certain aesthetic quality and with certain values of sustainability, etc., is one area of it. And then there are certain challenges or gaps, whether it's financial literacy or understanding of the market or operating a business. And sometimes these challenges are met by other players, which could be, say, an organization format like Okhai, or it could be an individual or the government, etc. But you're dealing with multiple stakeholders, therefore, in the ecosystem, and hence it gets challenging, therefore, to look at it as one enterprise to be invested in.
Yes, for sure. So, for example, if someone wants to invest in Okhai, I am not the organization that they're investing in. They're investing in all the other groups that I am working with, which is spread out across the country. And what I'm going to get out of them is not fully defined. It can be different each and every time. So I cannot give you numbers like, okay, this is what I'm going to generate this year. And so that's the tricky part.
Got it. Priya, with this kind of complexity, you've got various stakeholders who are supporting this ecosystem to develop and emerge, whether it's financially, from an employment and skill perspective. We were talking about the government as one of the ecosystem stakeholders. We were talking about the private sector. We're talking about the philanthropists as well. Could you give us a sense of the funding environment that currently operates, is under operation within this framework?
So I'll start with the data from our research itself. We mapped 516 for-profit or hybrid enterprises in the ecosystem, and this was pan-India. They had to be formal enterprises. When we say mapped enterprises, they had to have a GST registration. Ideally, they would have to have a MSME registration as well, but we had to loosen that little bit. What we realized is that 88% of them was self-funding, which means they're not even part of the financing ecosystem. When we say part of the financing ecosystem, and here I will differentiate, when we talk about capital, finance is different from investment. Investment is what you see on Shark Tank. Equity de diya, aapka ye product, whatever. That is investment. That is what you and I, or those who are from, MBAs and techies and so on and so forth, were used to that language, right? Finance, what is finance? Finance is your bank loan. Okay? You need a bank loan for working capital. You have to run your operations to be able to pay the artisan on time, because the artisan has to produce the product. That could be a loan, right? That could also be, say an investment. Maybe you have a patent that you want to now scale. It's very high risk. You don't know whether the patent is going to work or not. But that's a very high risk investment, right? So that is where like an investor might come in. If you're talking about capacity building, which is like, say, working with 500 artisans in one community, that might be CSR grants. So typically what has existed in the sector has been CSR grants. It has been the mainstay of non-profits so far. What our data is showing, that in the last 10 years, there is a whole new breed of enterprises emerging who have set up organizations and brands. And if you honestly just scroll through, passive scrolling on Instagram, I discover so many new brands today. Most of them are D2C brands who are, working with Handmade or so on and so forth. We are excited, but these are small businesses. They're working with small set of artisans, but they still need money to grow. That is where the challenge comes. So typically right now, the sector is self-funding itself, except when it comes to capacity building, which is largely funded by the foundations and the CSR. But the mainstream foundations, if we are talking about, say, like the Nilekatis or, like India ke bade foundations, they are still sitting at the sort of periphery and saying, we don't really understand the sector because there is no information about the sector. And from a financing perspective, just to close the argument, we have mapped that there are now 6 different types of enterprises. There's no homogeneous whole. There is no one kind of enterprise. There are now 6 different kinds of enterprise. And if we have to look at the ecosystem of enterprise building, it starts at the agri value chain, because materials, cotton, comes from agri, right? And then it goes into processing, it goes into value addition, it goes into design, then somebody will aggregate in the process. Then there will be others who will create, some people will sell small D2C, and now we have like brands, sutas and opening stores everywhere. And somebody will move into the luxury space, which is super high end. So there are 6 different segments, which means the financing and capital needs for each segment are very, very different. So there is no one size fits all.
So 88%, yeah.
Sorry, I just wanted to add a point to this. Yeah. No, because I was just very curious to add this point because I mentor a lot of startups, and I think I would just agree that there are various kinds which have bloomed in the last 10 years. But I think the main difference I notice is that there are certain startups which are working for artisans and some who are using artisans as producers. And I think that is something which they should be very clear about, because there is this whole thing of that we are doing good. So like I said earlier, there is no need for sympathy. There is need, because if you're using artisans to create your business, then you're dependent on them. So actually they are more valuable for you than the other way. So I think even the financing needs for me are very different for people for artisans versus people using artisans as producers. And they should be clear about it in their pitches. They should be clear about it in their messaging to the consumer, most importantly, because everybody very loosely uses the thing as a statement. And I think that both to the consumer and to the investor is really important to make it out very clearly. Just wanted to add.
No, I think that's really helpful, because what both of you have actually shared is given us a sense of the complexity of the ecosystem. You're talking about different kinds of enterprises and their evolution, therefore, is differing. Therefore, for an investor to come in and invest in these organizations, they need to understand these differences. And on the other hand, as you're very rightly saying, the intent of the organization, whether it's to support artisans or to use artisans for a larger goal or a different goal. And where then is the credit of the artisan? And that larger context of community copyright, which we won't go into today. But what you've brought about is, I think a clearer sort of softening of the complexity that we are dealing with. When we talk about traditional finance, and this is also coming from the 2018 World Bank report, is that traditional finance will look at organizations that can scale, that can become profitable. And often, as the World Bank report also stated, and you yourselves have said, not all organizations have the capacity to scale. A lot of handicrafts enterprises tend to be micro and medium and small enterprises. Not everybody can become a large player or corporate player in the ecosystem. Given this reality, how aligned is the traditional financing system to service the finance and investment needs of this ecosystem?
So one of the things we realized is that we are all obsessed with the idea of a unicorn. Correct me if I'm wrong. Everybody wants to become a unicorn. Everybody. But one, we need to understand that there are perhaps globally maybe a few thousand unicorns, but there are a few 100 million MSMEs across the world. These MSMEs are creating jobs and adding value to the communities. They're still profitable. A lot of them are sustainable. And therefore, if you're talking about the volumes game, the MSME today in our country has a much larger role to play than a few unicorns. That's one. Secondly, the reason why traditional financing, and what do we mean by traditional financing? There are two types of traditional financing. एक तो debt है, दूसरी equity है, is what we are all familiar with, right? Now, why does debt not work in this sector? Because out of the enterprises we mapped, if 50% of them are women-led, 70% of them are supporting a women-led workforce. I'm a woman, she's a woman, you're a woman, and the women in the room, please tell me how many of you actually have collateral, have an asset that you can take to the bank and say, now give me a loan against this. You're lucky. You're lucky. I don't own anything. So therefore, most women, if you are building a business, it becomes really difficult then to put some asset and draw a bank loan. That's one. The second thing, from a traditional financing perspective, is who are the people who are building businesses in this sector? Most people are creative people. You know, we go to design schools, we go to art schools, we go to all these journalism schools, arts management schools. Nobody teaches us business and financial literacy. Honestly, I had to learn all of this like at 43. However, so therefore, what happens is when a creative person builds a business out of a passion, you're not, the first priority is not the P&L statement. You want to create a beautiful product. Therefore, the financial literacy among founders in this sector is significantly low. The third challenge that comes, which means you don't know the difference between what money to take when equity abhi lena hai ki debt abhi lena hai. That becomes the first barrier in some ways. Then let's talk about what do you need money for, right? There are 4 kinds of reasons why you will need money if you're building an enterprise. First is you need the seed stage. You know, when you're starting a business, somebody in your family or your friend will give you money to start the business, or maybe you have your savings. The second stage, when you have reached the business to a certain point, you will need to innovate. So you will need some sort of innovation capital. When you're building the business, you need working capital, which is to run the operations of the business, right? And the last stage is growth capital. When you've reached 3 saal, you have built an enterprise, you know you can grow it to like whatever, unicorn level, somewhere under that, but then you need growth capital. Now, all different reasons for needing capital now have options, but traditional debt and equity do not fit all 4, the reasons for why you need capital. If you need working capital, now there are multiple options. You don't need to only look at a certain traditional debt with 25% interest often, or anywhere between 15 to 25% interest. What our enterprises are saying, if they want debt, they want it under 15% interest, which is not available in the market. If you want to dilute equity, enough enterprises come to us saying, Priya, growth capital chahiye mujhe. Dilute karte hai kya equity? I'm like, why do you need to dilute equity? Just because you looked at Shark Tank, you want to dilute equity. But what is the need to dilute equity, and how much equity to dilute? Because people come to me and say, कि मतलब 50% dilute कर दिया. For what? At the 3rd year of your business. So those are now, that is a financial literacy problem. That is not available in the sector. So that is where the traditional financing doesn't work for the sector, because its needs are unique and the people driving these enterprises are also different from your tech bros. No offense meant.
No, but this is interesting from the point of view of this challenge is very specific to the sector. And Manish, you said you mentor a lot of craft-based enterprises. What are your insights on some of these challenges that have been outlined, especially in relation to why it doesn't fit into the traditional funding model?
Right, so I agree to most of the things Priya already said, and I think it's research backed, but I think what I also notice a lot in, so there is a struggle that the investors face, and there's a struggle that the one who's asking for the funds face. Because on the investor side, I think their lens is scale mostly, and scale may not be the right thing to judge when you're looking at craft industry. Maybe profitability is, maybe even to some extent defining the role as impact is, but maybe scale is not. Because if you rush the scale, there are 80-90% chances of you going wrong than going right. So chasing scale is the last thing that can benefit craft industry. So the lens from the investors itself has to change. The other thing I feel is from the other side, where I think which is a dilemma for the investors again, because either you find people who are starting businesses which are tech driven, or you find creative driven, like you said. So there is very rarely that you come across a startup which has managed to get a good combination of people which can make a successful organization. And which is another reason most of the organizations don't reach where they should ideally reach, because they never started with the right team. So I think that's the first thing that I normally tell them, that first invest in the team so that you are good at all levels and you are not solo. And especially, I think, I could be a little more apprehensive when I see an organization which is only with tech and in the craft sector, then I get very wary. so it's probably better to have a creative driven person, because the rest of the resources could be easily found, but it's not easy to get a tech person to get a right creative person. So I think that whole marriage and to be able to get the right team is what really fetches you the right financing, I think. And then of course the financer needs to have the lens, which I talked about.
Great, yeah.
To add to that, so what we really need are impact investors. Someone who can look at 1 lakh and say that, okay, we'll give it to 10 artisans. we can just give that 1 lakh away, right? It's going to be a donation. But is that going to help? Can you invest that 1 lakh instead in a system that is going to help these benefit from it many times over? So that is the kind of investing that is really needed in this space.
Yeah, but we are going to come to impact investment and spend some time on that as well. Yeah.
So, I mean, I'm just going to, from a verbiage perspective, what we don't need are impact investors actually. Because impact investors are no different from commercial investors. Only thing is there is an additional sort of layer of saying कि भाई हमको 10x return चाहिए but impact भी चाहिए. There is a difference because that is what impact investors today globally are driving towards. What we do need, however, is what we have talked about in our research, what we call catalytic capital investors. So they are sort of a bridge between the impact investment landscape. They want impact, but they also understand that you're not going to get the kind of hyper returns that you will get in, say, a late stage startup. Impact investors usually operate in the startup ecosystem. They don't operate in the MSME ecosystem. What we need are catalytic capital investors. What is catalytic capital? Basically, think of it as philanthropic funding, donors at one end of the spectrum. Then you have directly investors, commercial or impact investors who also want impact and they're willing to give you some concessions. And then come the commercial investors. In the middle of philanthropic capital, which is donor capital, and the impact investing ecosystem, there is a gap right now. The gap is where investors who are willing to say, you know what, if we take a much higher risk because we care for the sector or we care for X and we want profitability, but we are not expecting unicorn level growth. And they're willing to be patient. They're willing to say, instead of giving me returns in 5 years, can you give me returns in 8 years or 10 years? Because they're willing to be that patient. Those are the kind of investors we want. These are willing to take the higher risks. Of course, informed risk. We are not asking you to come in blind, but take a higher risk. But because somebody takes a higher risk, and a catalytic capital investor takes a higher risk, a commercial investor will say, because you have shown faith in this enterprise, I am willing to now come in. So that is the ecosystem that is missing.
So it's sort of tomato in some ways, right? Because when you're defining it, it's actually impact investment. Except what you're talking about is the current reality of impact investment, which is expecting that 10x return.
It's a dream investor also.
Yeah.
yeah, of course.
Okay, so the way we had structured this conversation was that we were going to give you a sense of the landscape of the ecosystem, to give you a sense of what exists, the complexity of the ecosystem, and then open it up for a few questions and then go back to the panel. So we have the room open now. We'll take maybe a couple of questions. One request as you're asking questions, I can already see 2 hands up. Please give your first name. And if you can limit the question to a few words. If it's a comment, please refrain from making that comment. We can hold on to the comment till after the session. There will be enough time to chat after. So only a question. Thank you very much. Yeah.
Thank you. I am Mudit Jain, a businessman. My question then is, I wanted a comment, but question is, if you ask me, it's all about mindsets. You shoot yourself in the foot by calling yourself non-profit. The product you have are unique. So my question is, if you have good management like Aditya Birla does, there will be an ideal resource for you to scale up and, management is all about software. You have seen the IT companies as compared to manufacturing companies. So any comment by you and others?
So I think I'll go back to what I said earlier, that you choose to be what you, so whether you want to be for artisans or for using artisans. So I think it's the choice, and once you make the choice, the best thing that one should do is to stay put to that. I think the most terrible examples exist where they've been shifting priorities, or when they say that suddenly midway they feel that, okay, this can't be profitable, so let me now do it the other way, and then they dilute their product, they dilute their promise, they dilute everything, and they become something else. So I think choosing and then sticking to it is probably the answer. So I'm not saying that there is no reason to be not profitable in the craft sector, but you choose it right up front and then stick to that. So I think that's what I would say to that.
Manorath, would you like to also respond to that, considering you are specifically structured as not-for-profit, but yet you're participating very formally in the market to a very high percentage?
So, I would say one thing, that when we go to board meetings and when we get questioned on, okay, and when we ask for a certain donation or when we pitch to someone, and we get asked this typical question on, okay, so what are you going to generate? Like, what is your top line going to be? We can make an argument on how much impact we've created in the year, even if we've not met our targets. And I think that is really what makes the difference, because that will eventually create a top line that you're trying to get to, maybe not this year, but maybe next year or the year after that. And that leverage I get because I'm firmly a non-profit entity.
Thank you for that. There was one more question. Yeah.
Hello, I'm Manish Saksena. I've been working in the social sector for the last 10 years now. And what I understand about the sector is, and having studied the rural economy, that craft sector is the most lucrative one, where an export possibility is possible, revenue generation. Still, you all are facing the revenue problem. So my question is, have you all tried to go to social stock exchange like that? I mean, that is, I think, ideal for you all, because, I mean, and you can, there is a way where you can separate your NGO and the profitability.
So the social stock exchange has just emerged. So one of the things that if you look at the craft sector, is that there is absolutely no information. So even if there are many, many stakeholders working in the ecosystem, and there are multiple stakeholders, even from a government perspective, there are multiple ministries that work for the craft sector, but nobody is talking to each other. We don't know whom to talk to as enterprises and small businesses. We are small businesses. To do the compliance, so imagine if 88% enterprises are self-financing, which means you don't want to get into the compliance and all the, everything required to get into these ecosystems, because you're small businesses. Therefore, now a social stock exchange is a new idea. There's a lot of information floating around, but it hasn't filtered down to organizations like us. Even somebody like us who does research hasn't been able to understand how we can leverage the social stock exchange. However, there is opportunity, and hopefully it will emerge from a non-profit perspective to raise money as part of the social stock exchange. But what about then the for-profit businesses? What do we do about the financing for the many, many for-profits who are building small businesses and starting to build small businesses here? We do need alternatives for them to access financing that works for them. That is where I'll end it with.
Okay. We have time for perhaps one more question, specifically on the ecosystem. There's a gentleman at the back in a grey shirt. Yeah.
Hello. Yeah, my name is Jyotirmoy Chatterjee. I lead the Giving Pie network, or network of families in philanthropy, to the point of catalytic capital in terms of unlocking or bridging the gap between the private sector and the non-profit sector. Based on your research and perspective from the panelists, like, what have been barriers for funders at large to really identify this opportunity and actually lean in with philanthropic capital? And I think so, and connected to that, what are some shifts that are required to kind of really get more capital into the ecosystem, according to you?
Was the question clear enough, or you were audible? So, Bo, I think it would be great, any of you, but yeah.
So, Jyotirmoy, thanks for the question. One of the things that we are beginning to realize, especially based on the conversations that we had with multiple funders, and that includes donors, that includes impact investors, that includes even commercial investors. I think the biggest sort of roadblock right now for most people is the fact that nobody understands where to put in money. And correct me if I'm wrong, as Dasra, I guess you guys have also been trying to do the same, but where do we direct capital becomes the bigger question. What is the priority areas to direct capital? Because everyone has their own perspective on where capital needs to move. And that is informed by their own reality of where they're coming from. So, if we are saying catalytic capital is critical at this stage, is because catalytic capital at some level also allows a certain kind of de-risking of portfolios, which means you could have, and also then one of the approaches within catalytic capital, and sorry getting technical around this, but one of the approaches around catalytic capital is blended finance, right? So in a blended finance structure, you can be a for-profit investor, you can also be a mainstream donor or a philanthropic capital, you can also be the government sitting on grants. What everybody is asking for right now is saying, how do we come together to de-risk a new approach to capital delivery and a new approach to creating, to Manish's point of how can investors also innovate? But that innovation needs de-risking as well. So if a government can say, come in with a guarantee, and some of your investors can say, let's test out this 6% debt model, or a 5% or 2x equity model. Or can we support many more purchase order financing approaches? Because working capital is the key area where bulk of the money is required right now. Can we now come together to test out these new approaches, and that is really what catalytic capital as an idea allows for.
I'd just like to add another point that I think if I wear a different hat now altogether, I would say that it would be lovely to see investors who come and say that, well, you have a great product, a great idea, here I give you money to market it. Because what the craft sector needs most importantly today is to be able to market the product, because there is so much beautiful product existing. It just needs to be marketed to the right audience, to be able to put tons of money into making it reach the right audience. And I don't mean just by e-commerce. I mean even in various physical formats. But every action requires money eventually. And I think marketing is mostly very neglected.
I'd like to add to that the years that we are not self-sustaining are the ones that we've pushed in for marketing. And it's very hard to get donations on the back of that. So that is actually the biggest
Because
gap.
you can do a lot of good work, but till it's not seen, it's not sold. So I think that's where most of the craft sector struggles as well. So.
Okay. Thank you so much, and thank you for your questions. We'll go back to our panel. We don't really have questions. What we have is a couple of provocations for them, and they can choose to agree or disagree and give their positions to us on that. So the first provocation is that the craft sector, handmade and craft sector, should only make all of the other aspects of running the enterprise, marketing, finance, operations, should be led by other teams or other organizations. Do you agree, disagree?
I think we've already discussed the value chain before. So within that value chain, there are obviously teams that are doing something that they're more specialized in doing. And yes, if someone is a craftswoman and they're really good at what they're doing, and they want to continue to do what they're doing, they should just do that. But if they do wish to move out of that space and explore something else, that opportunity should obviously not be taken away from them. But I do feel that specialists within different spaces, just how it is in every other industry, would benefit the crafts industry a lot, because how Manish also mentioned earlier, you have designers who are trying to run businesses and they might not have the financial literacy. And you have tech people who are trying to hire designers, might not be able to find the right designer. So yes, definitely we need specialists to do specific things within the industry.
No, like I said earlier, so our promise to them is that we'll feed the loom, so to say, and we continue to feed the loom. But I think it's also very important for whoever's creating also to get some bit of commercial sense. So what we also, for example, do is that we actually make them sit through the costing, even if they are not interested. We actually tell them what are the inputs that go into a costing, and then we encourage them to put a profit on it. So it's completely transparent for them to understand as to what value are we bringing to their work and vice versa. So I think basic financial commercial understanding everybody should have, so that it sort of gives a drive as well, I think. Because then you're not just creating in limbo, you're also creating with a little bit of, drive that, okay, this is what it's going to make to my, or impact my livelihood in a way, so.
You agree, okay.
So we
Okay.
actually have many artisans within the Okhai ecosystem that have moved out of doing an embroidery or stitching and then become a designer or has become a marketing person or has gone deep into just the decentralized model that we operate on top of, so like deeply in operations. And I think very early into being associated with an organization that is set out to actually benefit the artisan communities, they realize that, okay, this is not something that we want to do and this is what is something that we want to do. So train us, teach us. And if you're open to do that, then obviously that's what keeps it moving.
And I think that's a very important point as well, because you're talking about the equivalent of interdepartmental transfers in some ways, but our understanding of the crafts and handmade sectors you should just make, and but what if traditional communities and families don't necessarily have the same level of skill or the same level of interest in continuing the tradition? What happens then? So I think this is quite an interesting point to speak to for that. Yeah. Go ahead, Priya.
So one of the things that we are also seeing, so if we look at craft and if we want to sort of break down craft, what is craft? I think our understanding of craft, and I'm going to equate it to a bit of yoga. When we engage with yoga, we engage with the asanas, right? However, once you go deeper into it, you understand there is a philosophy and behind and after and all of that. All of us engage with craft as a product. However, if we have to look at craft more holistically, craft is also not just the product, it is also the process that goes behind it, and it is also the experience. What we are not seeing enough of, and to give you a small example of portability of skills. Now, the folk artisan, typically a folk performer is also a craft artisan to some extent. Now, that artisan, typically there is a certain ecosystem within which he or she will function. But what we are seeing now from an impact perspective is there is a startup or a non-profit startup working with waste management in Udupi that has started working with folk performers to inform the community about waste management. Now, while they would have traditionally talked about Mahabharata and Ramayana in their communities, but that same skill has been ported to now drive impact in a whole different way. So therefore, I think it's also really, really critical to talk about the innovation that is needed for craft to also realize its potential, not just at the grassroots level, but also at the enterprise level and at an ecosystem level.
Got it. There were a couple of questions, and we've all spoken about the number of barriers between investors and artisans, so craft and handmade enterprises. Can these barriers be bridged in an accessible, sustainable, and inclusive way? If so, yes, no. Please defend your answer.
If I was to again take the example of the weaving community. So in the weaving community, there have always been traders. And I think while traders is seen as a word which is probably not given as due weightage as it should be, but I think they've done the most beautiful work over the past how many years, because if they hadn't done it, this craft would have died maybe 60 years back. Because they have in a way been the ones who have lended money, who have created opportunities, who have brought in business, who've sort of handheld them. Yes, some have exploited them, some have used, but so do we. Even startups exploit people, even businesses exploit people, even designers exploit people. So I think somewhere I think the trader has been a very good bridge. And I think today we have many more bridges. And I think every bridge has its own plus and minus. So I think there's nothing to say that this should be or not be. But the fact that there are 20 ways to now reach an artisan is only really healthy. So I think I have no doubt that we will not find 5 benchmark successful models which will then be replicated and will become bigger and bigger.
So that's an excellent point, but just to the point of also the investors and the artisans and the challenges that exist currently between them, which don't allow them to have that equitable relationship. Some of those challenges that were pointed out in the report is gender, for instance, or financial literacy or collateral, things of this sort. What kind of structures can allow us to overcome these barriers as investors or as artisans within the ecosystem, but preferably from the investor's point of view, because we have enough people here who'd like to know that as well.
I think think what she's doing is something we need a lot more of.
Which is research?
Which is research, and which is giving a platform for those linkages to happen.
And I would just add team, like the right team, because everything in this business is about the team, I think, and many other businesses, because it's the teams which make or mar a business. So I think the investors should actually focus a lot more on the team and the value and the composition. So I think all 3 points together, perhaps, yeah.
I mean, just to the point of linkages, I think one of the things that we are starting to do, and the approach that we also take, we call ourselves bridge builders. We don't call ourselves activists. Because what we've come to realize is that somebody sitting at the investor arm is also a human being who has their context and the pressures of how that thesis has been built. Same happens with every kind of stakeholder that is participating in the ecosystem. What we need right now are many, many more bridge builders who can speak, who can understand what the investor and their challenges, who can, go down to the level of go right across the different levels, be it at the enterprise level or at the artisan level, and say, okay, this is where the challenges are, this is where the challenges are, this is where the challenges are, and get them to talk to each other and meet each other halfway. I think, and to give, this is not new to India, by the way. How do you think the IT sector, happened? Like NASSCOM is perhaps one of the best examples of a bridge building organization in some ways, talking to policymakers, talking to different sets of folks and say, okay, how do we now understand each other and the language that we are talking? And it emerged from that. That is what we need more of. Obviously, there is support and there is value, and it will filter down in the information age. Now, artisans, and please correct me if I'm wrong, today artisans are really smart. They access everything from Google to YouTube to whatever, they know what is happening. That is not to say that, and there are many excluded as well, but hopefully that will change with more information filtering down and better models emerging as we go along. But we have hope, I think.
We have also laid quite firmly tiptoed around the role of the government so far. I was just reading, I think a couple of weeks ago, that I think 22,000 crores has been allocated to the MSME industry, MSME Ministry of MSME. So just thinking through the amount of money to various ministries today which intersect with this sector. And thinking about their role as policymakers, whether as policymakers, enablers, funders, etc. If you could talk through what should be the ideal role of the government. I know you've touched upon that briefly as, as a public-private partnership as an example, but if you could talk through from your perspective, what would be the ideal role of the government in enabling finance and investment into the sector?
I think to not just be the ones giving the monies out, but also sitting with these groups and actively bringing some financial literacy in order, because you can fund an MSME and they might not know what to do with it or how much to put in what and what will happen the year after that, and then that money will come and go, and it might grow a little bit because of that, but it will not be a consistent, sustainable growth. So I think it needs to be looked at, not just disbursement of the funds, but also who is this being dispersed to and what is going to happen year on year on year through this disbursement. I think that's what the government needs to really look at, what that model is going to look like. And I don't think that model exists at all right now.
So it means not just fund disbursable, but also following the journey of the growth of that enterprise or the sector.
Fully,
Okay.
and seeing what a certain training program is going to do, or what a certain group of people being sent to a certain village to conduct something is going to lead to eventually. Is it going to lead to anything, or is it just going to be something that gets signed off and then, it's done? So that.
No, I'm sure Priya would have a more detailed answer, but I think this is where my literacy fails me, because they are so complicated, it is so stressful to even be able to avail of it, that I think it just becomes something that you just stay away from. And then I would fully agree that who they give it to, because it's typically like, in this year I have to allocate so much, now I can give it to for lack of any other word, I can just give it to any gadha who's ready to take it, and then just not worry as to what that person actually did with it 3 years later, like you said. So I think I've seen so many examples of just these dilapidated units which are lying neglected just because the funds went to the person or to the organization which did not know what to do with it. So I think one is the complexity, because it's not simple enough. And then it goes to people who are smart enough to get it, but not smart enough to use it. So I think both the things failed for me, I think.
Sorry, before Priya, you answer to that, and maybe you could add to this as well. Do we have, do you think, from what you're both saying, is that the government needs an impact and evidence-led mindset, which it currently sort of does not have? It just, the idea is there is a policy, there's a budget, I will disburse it, and it's a checkbox activity as opposed to really thinking about growth and investment. Okay.
I mean, that's a lot to say, but yes, maybe.
I think there are multiple ways to look at it. What we are seeing, and this is of course my understanding of it, that there is enough work happening at the government end. There are budgets allocated, there is money in the ecosystem, especially at the government level. But the challenge is that the sector operates across some multiple ministries. So there's MSME, there's METI, there's Ministry of Textiles, there's Tribal Affairs, there is NRLM. So for small businesses or even for CSR actors, for any foundations, to be able to even navigate this becomes difficult. So one of the things that we have talked about in both reports is that we need a single window policy across every ministry. It cannot just, we don't know whom to go to. And what is give us a clear pathway of how to access this money. That's one thing. The second thing is and this is something that we are talking about again, whether it's realistic or not, we don't know. But now the sector needs a name. We can't keep calling it handicrafts, handloom. There are multiple names now within which, and there are multiple subsets within which the sector operates. What we are proposing, which is also based on what emerged in Southeast Asia and Africa, saying that now globally the handmade ecosystem needs to align across language. So what we have proposed is creative manufacturing and handmade. And the reason for that is, no enterprise today, and it's difficult, because the karigar who is being upskilled is not the traditional artisan, is also it's a livelihoods conversation now. So it is not just pure handmade or pure traditional handmade. There is also natural dyes emerging. There is, tech processes are coming into the ecosystem. So how do we sort of align everybody into one umbrella? So we need a sector level name. From a finance perspective, because there is money sitting in, what the government is best placed to do right now is, and we've heard enough CSR actors and investors say, we are not incentivized to invest in the sector. What does that mean? Often, any kind of incentive is linked to either tax breaks or the government coming in and saying, listen, if you were to invest, and this is what we will offer. Now, that could be a guarantee, that could be some, saying we will give you policy level backup, whatever that might look like. But a certain incentive needs to be built in for private players to now come in and subsidize the sector, because this is a nascent sector that is, in the first 10 years, any sector needs subsidy. Somebody like IIT, somebody thought of, right? Where is the IIT equivalent for an artisan school in the country today? There are so many IITs, that's why we are now the software giant. But where is the IIT equivalent? And that was a government and a policy initiative. Are you okay? No. Do you need water? Yeah. So I would say that there is at the finance level, streamlining information, because it's not that the government is not doing good work. I mean, look at BharatTex itself, which happened last year. There was a massive representation of handmade enterprises or craft-led enterprises with pavilions across board. Challenge is that we still need to function within a framework where people know how to access information. We don't have that. So therefore, also trusting a few intermediaries would be nice.
Actually, just a statement I wanted to say, that maybe the government should do, like you said, there are 4 kinds of funding. I think working capital is where they can make the maximum impact. I think they should stay away from infrastructure and stay away from innovation, because these are things which need hand-holding later. And that's where the misuse also happens. But if you give working capital to somebody, it's an efficient way to track that, okay, what did they make of it? Because most of the times it's infrastructure that you make a building and you make 100 loom shed, or you just take this land and then you see something else happening there eventually. So just a comment.
No, completely.
So overcome. Just kidding. No, I'm okay. Thanks. No, but this is great, because I think we expect a lot, as there is it's a very cross relationship, right? On the one hand, we're like the government should do everything, but the everything doesn't work always. So it's good to sort of break down where could they best play a role within this context. Now, there's an investor or the government that comes to you and says, okay, I'm willing to put in some money in your enterprise or your sector, but where do I see value? Where do I see impact? Where do I see profit? What would your response to this be?
I think it's across everything. You see impact at a level where, if, for example, from Okhai, you'll see impact at livelihood level, and you'll not just see impact at that one generation level, you'll see an intergenerational impact. For example, right now, there are artisans that got onboarded on Okhai when it started as a really small enterprise, whose kids have been sent to school through their earnings, and those kids have now joined back the businesses and are helping them with tech and business and other things. So we are seeing a multi-generational impact there. Whether we can measure it or not, we don't know. Whether we can write a report on it, we don't know. But there is definitely impact happening, right? In terms of profits, I think we all need to just learn how to pitch better and crunch our numbers better and say that, okay, this is a very unique product. It is it's not replaceable easily. No giant can just come into the space and be like, okay, now I'm going to do this and be able to do this, because it's taken years for you to build it. So it is very unique. It has a space. It has great potential, and it is definitely going to become profitable at one point if you keep getting the working capital that you need on time, you do your innovation on time, you have the right linkages, you're reaching the right customers across geographies. So obviously those are plans that can be made and presented. And I don't think I don't see it being an issue if it is presented in a manner that it truly is. I don't see why an investor with the heart in the right place shouldn't invest.
Fantastic. Manish?
Yeah, so I think I'll just repeat the same thing, that the objective of both should be common. So one should know that, okay, you can't be a chooser when you're asking for funds mostly, but then one should also be able to gauge, is he the right investor for me? Because is the heart in the right place, for example. But also, like I said earlier again, that I would take benchmarks differently, but I would also say that if you're looking for revenue, then give me, in the first 2 years, give me equal amount of marketing spent. So don't expect revenues to happen without marketing, and that's when I think the results would be very fair and very obvious, and that could be one way to sort of measure it. Because, once you've given the right inputs, output has to happen. So,
Priya, to close this off.
I'm going to take a slightly more 30,000 level feet, make an argument. So, let's start by understanding that today in our country, 95% of the country operates in the informal economy. What does that mean? When you say a country operates in the informal economy, which means chances are that 95% of a 1.4 billion population does not have social protections, does not have bank accounts, does not have access to basic things that we take for granted, which is access to digital, access to insurance, PAN card, things like that. Now, if 95% of an entire country is operating within the informal economy, and if our guesstimate, as it were, is that 200 million livelihoods are linked to the craft sector, we are talking about a very, very, very large population of people. Now, for everybody who is trying to build startups, all the tech bros in the room, most of our audiences for tech products are people like you and me, right? Now, we are saturated with whatever new technologies and apps and XYZ that are emerging. We are one, or maybe let's be generous and say 5% of the entire population of our country. If we have to grow as a nation, we will need to now build new consumers who are going to use our products that we build. It can't just be the 1% and the 5% who keep buying the same things, which means what we call our artisan communities and the informal economy and our rural economy, now those communities have to also start having an aspirational pathway to growth. The next generation has to have that. Currently, just to also give you data, the average age, one of our recent reports that is going to emerge in the next, it is funded by the USAID on digitalization, it is saying that the average age of a weaver across 4 states, Assam, West Bengal, Tamil Nadu and UP, is 47 years old. The average monthly income is 10,000 rupees. And usually they are the breadwinner of the family. Now you tell me, in 10,000 rupees, kiska ghar chalta hai? So therefore, the reason why capital now, we need innovation in capital and we need to subsidize capital to support the sector is because enterprises like Okhai will, first of all, they work in a decentralized way. There are no factory setups. Our understanding of growth is a factory. This sector does not have factories. Let's get that out of the way. Despite being decentralized, they are able to scale and achieve some level of growth and impact, which means those women now working at Okhai might have bank accounts today. They are actually consumers in the everyday market. Today they are riding a bicycle, tomorrow they are riding a scooter. There is aspirational mobility for them, right? What that allows is for then all the other kinds of startups that could operate in education, that could operate in healthcare, that could operate in financial inclusion, that could operate in any other space in India. In a country of techs, I mean all kinds of startups, they open up, basically they create an entry point for other startups to also participate in the informal economy because they spend time building trust with the artisan communities. It's not easy to penetrate for a financial inclusion startup to just walk into a village and say, "Abhi aapko insurance bechenge." Can't happen. What these enterprises end up doing, which is why we need catalytic capital, we need subsidized capital, we need innovation in capital, so that these enterprises are basically market openers as well. Yes, they will create a whole bunch of enterprises will also be profitable, will also be in more ways than one revenue generating and will put India on the map. But there are many, many, many enterprises that will also open up the market for the rest of the country to also participate as consumers in the value chain.
So you've got livelihoods, you've got market openers, and you've got innovation. 3 starting points for talking about value. Along with profit, not just profit. So with that, I'd like to open up the floor for some more questions. Again, before I come to you, your first name, second name, and the question that you have. And if you have a preference for one of the panelists to respond to that, please mention that as well.
So, taking 2 case studies and then the question, Amul and Fab India, I think what we just should ponder on, I think the biggest gap in the sector, I think, can get filled by either a wholesaler or a cooperative model which takes on market-led initiatives. What I mean is like a incubator that's looking at market-facing, because too many individual players, I feel, are fighting individual battles. And the battles are sourcing, management and sale. On the sale side is a solution, an aggregator, wholesaler, cooperative. And is Amul or Fab India doing that? On the market side...
What's the question, sir?
Yeah, so as you rightly pointed out, this sector should largely look at the sourcing. So I'm saying on the supply side, so sourcing and management is one part. On the marketing side, is there a scope for a super aggregator or a wholesaler to come in? And has Fab India or Amul done that in a corporate structure or a cooperative structure which is missing for the handicraft sector to look at very closely.
So, I think Amul, I would say, was successful because it's a commodity. It's a product which is a commodity driven, it's an essential. Here, a wholesaler has very little role to play because there is so much sensitivity involved in actually getting the market right, getting the customer right, being able to sell it right. There is so much now knowledge transmission that needs to happen, because otherwise if you get a wholesaler in this space, they can destroy the entire ecosystem of this. And the other example of Fab India, well, I don't think I should talk about Fab India. So I think
but to that question, do you think there is a similar organization or an example of a market enabler, directly taking to the market that you would give as?
I think the only reference point that I see from that is the decentralized model itself. Just like Amul exists. In fact, we call our part in Gujarat where we go the milk route, because that's the route that Amul used to take to collect milk, and we take the same route to distribute and then collect pieces as well. So I think that's the only similarity I see, but other than that it's way more complex, and this is a very simplistic model that I don't think will work.
I will agree to both of them. First of all, you're not selling, everybody in this room know what milk tastes like. There's no confusion around what milk tastes like, right? So you know what you're going to get. Milk will go into coffee. Taste the same. However, now there are 4 people sitting here wearing 4 different kinds of products. You might like my dupatta, but she might not like my dupatta, and that comes from different contexts. Very difficult to create an Amul-like model when decentralization is happening, and there are bigger organizations, be it Jaipur Rugs, be it industry. These are people who are working with 40,000 artisans and 30,000 artisans. We are not talking about smaller organizations. They are running decentralized, very sustainable models. So there are examples. However, in a Fab India kind of case, what also happens is there are many aggregators like that. Fab India was had an early mover advantage, but now with Aadyam coming in and with Tatas coming in and with corporates also backing this space, there is going to be some level of specialized aggregation that is likely to happen, which is good for the sector because they also bring a certain level of professionalism with them, which has been inherently missing in the sector. But to say that the aggregation is the only approach, I would disagree, because the sector is too diverse.
Basically too many SKUs.
I just have one thing to add here. There is kind of an aggregation happening in the form of a marketplace model, where there are, for example, Okhai has a marketplace model where there are artisan groups from across the country that can sell their products directly through the website. And that would be, I think, similar to what you're saying.
Okay. There was a lady in white who had a question. Yeah. Hello.
Hello. Thank you. Hello, good evening. I'm Nilanjana. I'm from SDA Bokkani doing my MBA. So thank you for such an informative discussion. And from listening to your conversation, the thought came in my mind is that we have fashion capitals of the world, we call. But why don't we have something like craftsmanship capital of the world or something like that? And India is such a beautiful country with so much of talent and everything. We all are here. So why not do branding or marketing like that, we are doing a lot of personal branding. Why not brand a city or a country like that? What's stopping us and how can I do it?
I'm happy to respond if you like. So a couple of points. One, UNESCO actually has a lot of capitals of culture. In fact, there are about 8 capitals of culture from India at the moment, which is a small, tiny number as compared to the wealth of culture that we have. Kashmir is a craft capital. So there are, this is from the outside though. When it comes to within India, I feel like there are lots of instruments to brand. Some of them are copyright driven. Like for instance, there's something called a GI, Geographical Indicator, and a lot of products and crafts in India have GIs. Most recently, since we are in Maharashtra, the Kolhapuri chappals have a GI. So there are various mechanisms to create that sort of brand, so to speak. Other examples of GI is champagne and Parmesan cheese, just to give a parallel. I think one of the problems that we find within India is embarrassment of riches. We have too much. And you know, sometimes both a boon and a bane, right? We're very proud of it, but how much do you brand and where? And the other challenge is also, personally, according to me, I'm answering for the panel in some ways, is you need very, very strong local governments and local ecosystem to promote that area. When you're talking about a state like Karnataka, it's likely to promote itself as an IT capital or an IT-driven state, as opposed to someone with a deep-rooted richness around Channapatna, if you know what I mean. Even when it comes to Bombay, it's not really called the film capital of the country. It is the financial capital. So art is never seen as that bit of prestige to push through from a market branding point of view. So you need like some visionary work happening at the local government and state level. And one small example is, I recently met a few months ago the BMC, and they don't have anybody dealing with culture at all. The only thing they have is one department that deals with beautification. And that's where all your street art and public monuments come in. So we are when you talk about policy making, we are sorely lacking policy making in livability, which is where a lot of culture can come in, including handicrafts, and then making that into a part of your city or your town narrative.
Just add to what she's saying, to continue with, I don't know how many of you remember, but the government of India had popularized 2 hashtags. One was handmade in India, the other was vocal for local. So these 2 hashtags went viral, and that was like all viral infections, it just died. Because it's easier to hashtag than actually implement it somewhere. So I don't know how many of you all go to Ajanta, Ellora. You all do. But you'll and you'll also probably visit Paithan, where the Paithani is woven. You'll miss out on a cultural heritage textile that's in Aurangabad called the Himru, of which the 19th generation is currently weaving that fabric. We don't talk about it enough. We don't link culture with tourism. We do. Culture means food, dance, music. Only these 3. We don't think beyond that. So unless those linkages happen at the policy level, I don't think we will see anything on the ground. And it works both ways. There has to be a bottom-up reorientation as well, where maybe influencers, travel bloggers, people who do that could actually travel to these places, popularize them, and then the government sits up and takes notice, which we've seen in the case of Goa, where people started wearing this particular heritage textile of Goa. There was so much sales that the government actually sat up and said, oh, this could earn us money. And they spent a huge amount of money setting up looms and now are GI tagging the weave. So it works both ways. So branding is not something that will happen, overnight. But again...
And we can have this conversation at the end of the panel. We will have to close this, but I didn't want to close this on a note of what's not happening and where's the gap, but instead close it on a note that's positive, because there is a lot happening. Each of the people you see here have done an incredible amount of work to bring this brand to different dimensions and different colors. And it's a very, very large economy. It's a very, very large ecosystem. It's the second largest employer in the country, the handicrafts and handmade sector. So given that reality, there's a lot for us to look forward to. How do we make sure that this potential, and I'm going to use the word exploited apologetically, to the best of its ability is the journey that we are on. And hopefully today's session gave you some pathways into doing that. All of the students here, please feel free to come and have a conversation with our panelists after and clear any more doubts. All the investors, I hope, I know I spoke to a couple of them before the session. If you have more thoughts, conversations, ideas, we'd be happy to, chat with you about what other areas that you may want to think about. And to everyone else, thank you so much for being here and listening to us chat and exchange thoughts over the last 1 hour or so. And thank you so much to Asian Society.